Hi and welcome to Hippo Brain. Here is where we have hippo-sized conversations with hippo-sized brains. Rajesh, over to you to introduce our guest for today.
Hi everyone. Our guest today is Navroz Udwadia, co-founder and partner at Falcon Edge, a hedge fund based in London and New York. And so I've known Navroz for a few years, one of the smartest guys I've come across. And Navroz started his career in investing, of course. For the last 20 years, he's been doing that. We'll start with covering Navroz's journey into the world of investing. So, educated at 3 of the best universities in the world, Columbia, Oxford, and Harvard. But Navroz started with English, law, and tennis. So Navroz, from there to the world of investing, how did that happen?
So I think it's, I get this question a lot actually, and it's an interesting question. I think it was a confluence of a variety of factors. I grew up in a middle-class Parsi household. Father was a lawyer, one of the most eminent corporate lawyers in India. Mother was a school teacher, English professor, University of Bombay. But then early on in my life, we had one of my siblings, one of my sisters passed away. And at that point, my mom stopped working full time and basically took care of me and my sister and managed the household. And she was a very active investor. Would spend hours every day doing fundamental analysis, focused on, with the limited resources and information she had, but very, very astutely, I remember this, doing fundamental analysis and seeking out companies that were well run, well managed, and without meaning to think about it, focused on competitive moats or competitive differentiation. And I kind of imbibed that. And I think if you look back, this is an interesting anecdote. If I look back over the last 20 years of her performance, I mean, she's grown our family portfolio from A to A+++. She's probably compounded at about 15-16% annually. It's amazing, actually. And with minimal beta, because very, very early on, she identified in India that there were a handful of companies with quality entrepreneurs run with clean corporate governance and with clear competitive moats, and she identified them. And long before it was fashionable to own HDFC banks and Ciplas, she was and Hindustan Unilever, she was owning them. She owned them. So I think I had that subtle influence by osmosis. It was not that she sat down with me and said, I want you to do this, but I kind of was exposed to it early on. So that was one. The rest really was honestly just being completely open-minded and not falling into a trap that I see many people fall into. At least I think it's a trap, which is not allowing yourself to be swept along by the tide of life and circumstance into what you're good at, but waiting for what you're really passionate about. And so I was an English romantic poetry major at Columbia, and I loved it, but realized shortly before graduation that I couldn't write romantic poems for a living. And I wanted to at least give law a shot. It was a deal I had structured with my father that in allowing me to do my undergrad in the US so that I could keep playing my tennis, I would give law a shot at Oxford. So I applied to go to Oxford as a Rhodes Scholarship. I was fortunate to get it from India. I went to Oxford. I have to say, without a hint of arrogance, I think I was naturally fairly sound at law. I kind of took to it immediately, but outside of contractual law, I didn't really enjoy it. I wasn't passionate about it. And I had my father very kindly helped me set up an internship at Linklaters, which is essentially the #1 law firm in the UK and one of the biggest law firms globally. And my heart just wasn't in it. So I wandered into this presentation that Goldman Sachs made on campus at Oxford, specifically for Rhodes Scholars. You could only go there if you were a Rhodes Scholar. It was kind of we had our own recruiting events as this pool of 90 Rhodes Scholars at Oxford. And I went in there with no expectations. I'd never done a math or a finance or an economics class at Columbia. I literally studied political science and English. I was literally the only Rhodes Scholar there. This was in 1997, 98, when, you know, you still were giving an arm and a leg to work at McKinsey and Bain Consulting and BCG, and you know, the consultancies were still where everyone went, particularly the Rhodes Scholars. They couldn't really be bothered about investment banking, and so by default, I got a summer job. And I went to New York. I was placed, as luck would have it, into probably the single hardest group, the financial institutions group at Goldman Sachs, which is renowned for its long hours and brutal work ethic. And I ended up there working for an amazing leader called Peter Krause. Peter Krause was the head of Goldman's Financial Institutions Group, and also sat on the firm's global strategy team. He spotted me and pulled me out of the intern pool and the analyst pool. Obviously, I got a full-time offer. I went back to Goldman, and he pulled me out of the analyst pool and put me onto the internal firm-wide strategy team. So as a first-year analyst, somehow I was sitting in meetings with Hank Paulson, Peter Krause, Eric Mindich, who was at that point kind of the heir apparent for the leadership of the firm, and all the top guys at the firm. Steve Mnuchin, who is now the Treasury Secretary for the President of the United States. These were all guys I was in a room with once or twice a week. And I worked almost my entire 2 years on Goldman's, still to date, their largest ever acquisition of a trading business called Spear, Leeds and Kellogg, which they bought at the time for $7 or $8 billion in cash and stock. Following that, I had an offer to stay on at Goldman and continue working for Eric. But I moved. I had done the investment banking side, and I wanted to be on the other side. I wanted to be on the buy side, and so I went to Chase Capital Partners, which at that time had just become JP Morgan Partners, and I did tech, media, and telecom investing. And I was basically, by a process of elimination, kind of going through these career changes, trying to find what I was truly passionate about. And then finally, I had the chance to go to business school. Well, I realized by that point that, look, I really enjoy finance. I haven't quite figured out my niche within finance, but I really enjoy finance. So maybe it's time to take a step back. And since I haven't figured out my niche, maybe I need a year or two to think this through. And while I'm doing that, why don't I go and learn the basics that I put into practice every day, but I don't quite understand the principles behind them, because all I've ever really studied is English romance and political science. So I applied to Columbia and Harvard Business School. I got into both, but because I had done my undergrad at Columbia, I chose Harvard. And went to Harvard, had a great experience at Harvard. To Columbia undergrad and Harvard Business were probably two of my best experiences in life. Made some great friends, and really put my head down while my peers did kind of the minimum required 4 classes or whatever it is. I was doing 6, 7 classes, going across the bridge to MIT to do options theory there. Really kind of took every single finance class that was available at HBS, including one with Professor Robert Merton, the Nobel laureate, who really invented Black-Scholes, and so on and so forth. So really kind of drank deeply from the well of resources that HBS offered. And then while I was there, started thinking about, okay, forget what I'm good at or what I'm not good at. what do I want in my next job? And I said, okay, I want something that is super competitive, because I grew up from the age of 5. At the age of 8, I was doubles national champion of India. And then basically from 8 to 17, I was either number 1 in the country or 1, 2, 3 in the country. I won 2 nationals doubles titles. I was twice national singles runner-up, etc., etc. So competing was essential to me, right? So I wanted a space within finance where I was competing daily, where my ability to communicate was valuable. My ability to outwork the people around me was valuable. My attention to detail mattered. And my just general curiosity about figuring shit out and asking why, could lead to something differentiated. And so I put all of these and something dynamic and fast-paced. And frankly, where I could make a lot of wealth, because eventually my North Star was always to come back to India and get involved in, as Rajesh knows, get involved in politics. So in my mind, I had a compressed time frame of about 15 years post-graduation in 2005, or 20 years, or even 25 years, to build my career, generate some net worth, and then find a way to return it to those who needed it much more urgently in India. And so when I put all of this together, public market investing popped out. It ticked all the boxes: fast-paced, dynamic. You needed to communicate with management teams and with your peers. Work ethic mattered, attention to detail, intellectual curiosity, creativity, being creative about your diligence, all of that mattered. And so I applied to a bunch of hedge funds. After many, many, many rejections, I ended up in the summer with a couple of hedge fund offers. I worked for a gentleman who gave me my first break, which I still value greatly, a very, very fundamentally driven, astute investor called John Moon at Oak Tree Capital. I learned a lot at his feet. And I had another mentor while I was there called Cheyenne Chatterjee, who I still reminisce fondly about. And then I split my summer working for John and Vikram Pandit. So, I worked 14 straight weeks while, again, all my peers worked for 8 weeks and then went away on boat trips and this and that. I was at a job that entire summer. And then went back after that as I got ready to graduate, and had a couple of hedge fund offers. Eric Mindich left Goldman Sachs and launched Eaton Park. Eric was and remains a great influence in my life, a mentor to me, wrote my recommendation to Harvard Business School very kindly. And so I reached out to him and we had a great working experience at Goldman. And so went to work for him. Was there for about 6 years, was essentially their second employee on the emerging markets team, initially in New York and then in London, and then came back to, and then left and co-launched Falcon Edge with my partner, current partner and great friend of over 15 years, Rick Gerson. So that's really the story.
So that's a very, very interesting, Navroz.
Yeah.
And I think over a period of time, you would have made your own mental models. And I would dare say, what came in big when you were making those mental models, the fundamental investing that you learned with your mom, or the romantic, poetic side of you that you would have used to conjure some magic. The aggression I can see is quite clearly as a straight line over there.
Yeah.
How would you describe your mental model, and how do you think it has evolved over a period of time?
I think the underlying the most powerful, I think what you're asking me is which is the most powerful impulse behind your path through life. And I think clearly the most powerful impulse is this desperate daily desire to compete. I am, despite running a team now, I am working, I was just telling someone yesterday, I start at 5:30 a.m. every morning. That's my first call. It's not when I get out of bed. My first call is 5:30 or 6 a.m. So I'm up generally. My ability to go from a deep state of sleep to a fully intelligent and coherent call is highly impressive and compressed. It's usually 10 minutes or less. I don't really eat breakfast, up out of bed, shower, boom, I'm awake in a minute and ready to go. So we start at 5, my team and I start at 5:30 a.m. Unfortunately for my poor team, my start time is imposed on them. And most nights I wind up talking to my co-founder who's in New York or on the West Coast at 11, 12 at night, my time. So, let's do the math. Let's call it 5 to 12. What is that? 19-hour days. And then in between, I'll make sure that I create or carve out an hour and a half of intense, fairly competitive exercise. So I think the biggest impulse for me is the competitive impulse.
So sorry. So in many ways, sorry, Rajesh. So in many ways, what you're saying, Navroz, is that you have the ability to outwork somebody and outwork and bring a lot of it. But I would love to dig a little deeper. So when you're outwork, there are various different models also. So there is a creative side, there's a fundamental side, there is the ability. Some of our hippo brain conversations have been the ability to understand the psychology of the person on the other side. So that's what Amrish also spoke about. Now, within a lot of these softer sides, do you see a winner coming in versus another, or would you say you play all of them and you horses for courses?
No, I think you actually have to, and this is why I think being more than just a left or a right side brain person is critical, because in my final evolution, which we didn't touch upon, which is over the last 3 or 4 years, moving from essentially what was a deeply short selling driven focus on the public market side. I used to really manage our short book, as well as our TMT, our tech investments globally, and also obviously all our India investing. I've now gravitated almost fully to being focused and running our private book at Falcon Edge, which is about half of our $4 billion plus in assets now. And what I realized on the private side, and what I'm reveling in and enjoying, probably the most enjoyful period of my professional career ever, is the having to pull together creativity, the art of making decisions on the basis of highly incomplete and imperfect information, particularly as you're in a seed or series A period, right? The need to evaluate and psychoanalyze founders in determining who you back, the need to psychoanalyze and evaluate the other people on the cap table to understand what matters most to each of them and how to plug into that, how to approach different people differently, and as well as all the other professional continuance, such as, is this a good business fundamentally? Is this a large market that can be disrupted via technology? Is this, are there competitive moats that can be built? Obviously, seed and Series A businesses very rarely have competitive moats, but are the founders doing the right things to eventually build competitive moats? And does this business even lend itself to competitive moats outside of just sheer capital, right? And so I've realized, kind of, not in the autumn of my career, but certainly in the summer of my career, that in many ways, private equity and venture capital investing requires the most the most myriad, interconnecting set of tools, far in excess and far kind of rounder and wider than just public market investing, where you're very data driven. You deal with with management teams, and kind of that's it. There's really no negotiating. I'm Indian, like you guys. We negotiate everything, right? I love it. Absolutely love the cut and thrust of negotiating. And by the way, despite living in London, I walk into stores, other than taxi fares, I still negotiate everything. Even things that you would never think that someone living in London would negotiate. And so all of that together, I think, and on the VC and the growth equity side, the ability to communicate concisely with insight is far more important than the public market side, where, once every 3 months you sit with a management team and, you ask them a predetermined set of questions, right? So I feel my skill set, as well as it tied into public market investing, is even more suited on the private side, particularly my love of negotiating and when you're a tennis player, you play 80, 90, 100 matches a day all over the world, all over India. You get on the court, and in those first 10 or 15 minutes, you're watching everything your opponent does, right? In the warm-up. How nervous is he? Is he licking his lips? Is he sipping on his water all the time? Is his forehand better? Is his backhand better? You're watching him at side change. You're watching his breathing. You're watching how focused he is or not. Which shots does he miss? Which side of the court is he better on? When you serve out wide, where does he return? So you're constantly evaluating to try and pick up patterns to be more effective in your shot selection and how you approach the match. And in private and venture capital investing, you're doing the same with founders, with your other fellow members of the cap table, and so on and so forth. So and because you're not constrained by public market material, non-public information, and all of that, also your creativity in pursuing your diligence to its lair can be far greater.
So Navroz, just going back a little bit, what made you make the shift from public markets to private markets? I mean, you were very good in public markets. That's a great path you could have pursued. You become better and better each year. Competitiveness stays as it is. And
I think I give credit really to my co-founder. My co-founder is one of the most, Rick Gerson, is one of the most impressive and inspirational people I've ever had the pleasure of working with. And I'm so grateful that I kind of wandered into the orbit of his life. But about 5 years ago, he sat up and said, I think the typical 2 and 20% hedge fund business model is broken. The days of people handing us black boxes of capital without any insight and paying us 2 and 20 are coming to an end, simply because the hedge fund universe as a whole hadn't outperformed the market for years and years and years. And that really was driven by 2007, 2008, the financial crisis, which unleashed tsunamis of liquidity. And these tsunamis of liquidity kind of evened out alpha. They took alpha out of the market. They certainly made short selling almost impossible. There was just so much liquidity seeking pockets to live in that even the worst companies could raise capital, could subsist, could sustain, could sell a bullshit story to the markets for an indefinite period of time. And he was ahead of his time, I think in 2014, 15, 2 years after launch, where it would have been so easy to put your head down in the sand and continue. He looked at this paradigm shift, confronted it with intellectual honesty that is his hallmark. One of his great lessons, as an aside to our team and to me, is the need always in life and professionally to actively seek out non-confirming evidence, not avoid it like most people do, not look away from it, not recognize it and put it aside, but to actively seek it out and then play with it, toy with it, figure out how could you be wrong before you're wrong, right? Or why is this data point not confirmatory to what you believe? And if it's not confirmatory, then we have to respect it and explore it and investigate it, versus because you've done 3 months of work and you've sort of formed an opinion that is part objective, part subjective, something that's non-confirming, you just kind of brush it aside, right? So I teach that to my team, that we have to be intensely intellectually honest with ourselves, that let's go out and actively seek it out, this non-confirm. So we will, when we call experts for company A that we're looking to invest in, we'll try and flush out on the call why we're wrong. Not try and seek confirmation of our thesis. So anyway, Rick Gerson recognized that our business model was heading towards a paradigm shift, and has put us over the last 5 years ago on a path where we are very focused in what we do in the public markets. So we only do special situations, event-driven situations, distress situations, dislocations. We'll wait with our baseball bat up, and we'll patiently, we won't swing. And when that one fat elephant pitch comes, we'll swing hard, right? And so in the last 4 or 5 years, we've outperformed the market by something like 30 percentage points across 4 years. And in the last 11 months that we've seen over the last 4 or 5 years, where the market has had down months, so the market has had 11 down months in the last 48 months, we've been up 9 out of 11 months. So we've moved our model from general, buy good companies and short bad companies, to a very specialized swing set that is highly uncorrelated to the market, because that's what we've realized investors want. Investors want lack of correlation. They don't want you to just go out and own Facebook and Microsoft, which they can now do through ETFs at no fees, no 2 and 20. They want uncorrelated investment streams. That's one side. The second side, Rick realized, was private. Building a long-dated capital business, which essentially is private. And where do we have our edge, right? We have no sustainable competitive advantage in the US. We do to some degree in China, but we do to a much greater degree in India. And so he came to me and said, look, this could be a really big opportunity. China has built $3-4 trillion of TMT, tech and telecom market cap over the last 10 years. India has built 5 billion. At this point, all we had 5 years ago was Info Edge and Rediff and 1 or 2 others. Why don't we dedicate ourselves to this? And so in 2013, we started private investing in India. We certainly weren't the first people in, but I'd like to think that we do it in a very careful, differentiated, and thoughtful manner now, almost 10 years later. And so Falcon Edge today is 4 billion plus. Public markets is about 2 billion. Private markets is about 2 billion. Privates is focused on China, India, and the US, predominantly India. Public is, as I said, these very differentiated situations and outcomes where, because it's a SPAC or because it's an event-driven situation, your downside is bounded, but your upside relative to that bounded downside is highly asymmetric. So that's all we do. We're very focused. We will not stray outside of that, no matter what. And I think as a result, Rick has kind of pulled off this Herculean turning of the ship while it's at sea in stormy water. And we've had 4 successive years of outperformance. And this year, in a year where the market has had massive turbulence, public markets, and I think is up a few percentage points. I don't know what it's up. We're up almost 30% again on the public side. So I think Rick and my third partner, Ryan Khoury, who has been with me since my years at Eaton Park, and now kind of oversees a lot of our public work, or I should say all of our public work, has been a steward of that performance, or outperformance.
So it's interesting. That actually leads me to another question. Now, was that when you're looking at private markets, you're looking at India, China, and US.
Yeah.
I think it would be very valuable to get a perspective of India versus China versus US, because to the lay investor or to the lay person, in many ways, US seems to be the holy grail of innovation, and China seems to be the holy grail of scale. How does India stack between them? And what is the differences that you see as an investor?
I think in many ways, so I would agree with you. India, the US is the holy grail of innovation. What they are doing on a daily basis there is nothing short of breathtaking. And that's because they've put into place that it's aspirational to be an entrepreneur, that it is okay to fail. In fact, it's a badge of honor to fail more than a couple of times before you and kind of continue trying. And there's very little personal liability to failing in the US. Both professionally and even in your personal life. You know, you default on your mortgage, you hand over the keys to your bank and you leave. You're not personally liable, just as an anecdote. China, I think, is interesting because you're scaling, but let's remember that you're scaling in what is inherently a completely closed and protected market, right? The Facebook of China isn't Facebook. The Google of China is Baidu. So the delivery hero of China is Meituan. The Priceline.com of China is Ctrip. If you come to India, the Facebook of India is Facebook. The Google of India is Google. The Priceline of India is Make My Trip and Booking.com. So India is a completely open market that is, as a result of which, is not going to see the growth of one or two dominant platforms in the way China has, with multiple other platforms sitting like symbiotic reptiles on the mother platforms. I believe India will be far more fragmented. I think over time, you'll have 5 or 6 ecosystems in India evolve. So you'll have the geo ecosystem. You'll have the food delivery guys will somehow create an ecosystem. Ride share guys have the ability to create an ecosystem. I think outstanding fintechs like Policy Bazaar, Cred, Off Business, etc. Bright will kind of create their ecosystems. But I think India will be like the US, more fragmentation, more likely winners, also more likely losers. Unlike the US, unit economics in India are the most relentless in the world, because you've got 50 or 100 million Indians who have a ability and willingness to pay. The others, then there's another 400 or 500 million who do have a willingness to pay and an ability to pay, but it's at a different level. And they're just getting used to the internet and transacting on the internet and so on and so forth. So when we look at Indian businesses, this kind of leaps ahead to the mental model question. We have obviously our mental models, but we're always looking at big profit pools in India with structural tailwinds, high AOVs, fundamentally high gross margins, versus businesses that are fighting for a rupee here and a rupee there, right? And trying to monetize. If it is a rupee here and a rupee there, there's a wonderful fintech that we are very, very excited about in our portfolio called Setu. These are the guys who basically wrote the India stack, 2 of the most outstanding young entrepreneurs, Sahil Kini and Nikhil, who I've ever met in India. And they worked with Sanjay Jain at the Bharat Innovation Fund and Nandan to write the India stack and put into place Aadhaar and DigiLocker and DigiPlus and so on and so forth. They're building a business of API execution on the fintech side, where you're collecting rupees for every transaction, but you're processing millions and billions eventually and trillions of transactions at very, very high margins, right? Because it's all software. Yeah, that's the difference. I think it's a far more competitive. It's the most competitive market in India, far more competitive than China, far more difficult to scale. Because if you're a vertical, you're bumping up against other verticals and horizontals. If you're a horizontals, you've got 1 million verticals below you and you've got other horizontals adjacent to you. There's no protection for the home incumbents by the government in the way China has protected and allowed wealth to aggregate to a few founders. So I think as a result, investing well and successfully in India is a real badge of honor for those who have done it.
If I may, if I just push that bar a little bit, the Indian market also has been criticized, rightly or wrongly, I take your view, on being differentiated or survived on the basis of being able to raise capital. Because the ability for a few to raise a larger amount of money has ensured survival more than really innovation is some of the criticism I hear. So would you have a take on that?
Are you talking on the private side?
On the private side, and now even on the public side.
Yeah, on the public side, I think we're in for a really tough period for the next couple of years. Where, by the way, I personally think the capital market, the public market in India is entirely out of whack with the underlying impulses in the economy. And so I really, right now, I own virtually nothing in India on the public side, because when I can't understand something, I don't want to play in the game, right? If I don't understand the rules that others are playing by, I'd rather sit on the sidelines and watch the game until it blows up, and then come in and pick up the pieces that others have dropped. And so I don't understand where businesses are trading at on the public markets relative to a very slow economy, a big hit to discretionary consumer purchasing power, continued industrial production recession. Now we're in our 7th or 8th year. We're almost certainly going into a financial sector recession. Because you've probably got another $40–50 billion of NPLs coming down the belly of the snake without adequate capitalization on the other side of the table. And we've just come out of the 2012-13 banking sector misallocation of capital. It took us 7 years of zombie kind of sleep crawling to come out of that, thanks to the stewardship. And the only reason we've come out of it is thanks to the government being bold and aggressive under our new prime minister. So on the public market side, I'm quite contrarian and skeptical right now. On the private market side, I tend to agree with you. I think Chinese funding at the margin has fueled the survival and the growth of a handful of companies that probably don't have a business surviving. I don't want to name businesses, but there are certain businesses that I consider in India that are widely accepted as unicorns or decacorns or whatever multi-billion-dollar valuations, that are valuations in search of a business instead of businesses in search of a valuation. And so I wonder, and it's always unhealthy when the same investor is marking up each individual successive round and essentially marking its own capital. And so I think at the margin that's being drained out of the system. And so I think it's interesting. It'll be an interesting setup on the private side as some widely accepted winners have to either find a way to fix unit economics or take substantial down rounds. I think that's coming.
So Navroz, when you look ahead, say next 4 or 5 years, I mean, you mentioned earlier that China created $4 to $5 trillion of wealth, and the US, of course, has been phenomenal in the tech space. If you look 4 or 5 years ahead, which sectors do you see in India could be the engines for sort of massive wealth creation?
Yeah, I think fintech. I think the paralysis and the lack of capitalization, the legacy branch networks, high cost, high touch branch networks, and the lack of financial inclusion, the lack of reach in India for the formal banking system means there's always going to be a lot of interesting opportunity in fintech world. So I spend a lot of time in fintechs, and I believe that in Ashish at Off Business, Avi and Petco at Bright, Sanjay at A Finance, Manish Patel at MSwipe, and a couple of others, the Nikhil and Sahil at Setu, and a couple of others. We've really got Kunal Shah at Cred is someone else I kind of watched with great admiration at what he's putting together. I think we've got a great set of fintech founders in our ecosystem. I think Harshal at Razorpay, even though I haven't really interacted with him, is someone I look at with admiration for the business he's built. And so I think fintech is a spot of is a space where we think value will be created. But fintech, as you know, requires capital. It's not a non-linear scaling of capital base. It requires regular increments of capital. Outside of that, I think education will build something. Culturally, it's a space with a high willingness to pay. Your counterparty is creditworthy. It's the family. And as we all know, our parents would give their last rupees for our children, for our education. I think I have a very, very interesting company in my portfolio that I believe has cracked the code on making money at $5 to $10 AOVs for social e-commerce in India. And they're not focused on beauty, fashion, or healthcare, but just on the daily essentials. They focus on tier 2, tier 3, tier 4 cities. They source only local and regional supply. They make themselves the Amazon for those suppliers. And they manage all their own fulfillment because they came late to the journey. They're unencumbered by what Indians have widely accepted, which is the Western method of fulfillment, big DCs outside cities, and then you drive in on scooters, and generally you're delivering around 80 to 100 rupees. These guys are delivering, doing fulfillment at 40 rupees, and they think they have a path down to 30. And they're actually almost EBITDA break even on a 300 rupee basket. So phenomenal. And it's a demographic that no one is kind of focused on. Everyone plays at the $20 to $100 basket. Exactly. Under the radar screen, but outstanding. And they're just about to conclude a round with a high quality investor base. I think content, local language, Daily Hunt is an asset that I watch closely and carefully, because I think catering to the next 500-600 million Indians, well before their time, where they were doing this in 2012, when no one was talking about local language, is going to be a really interesting area. So I think kind of finding a way to monetize fintech, edtech, and then this vast pool of Indians that have a low spending ability, but make up for it with their sheer numbers and the fact that no one's kind of cracked the code in how to build unit economics around them is where I'm focused. And also beauty and fashion. I think that's a very, very interesting space. Basically, I look for spaces where the Indian consumer has a terrible buying experience, fragmented supply, very hard to access, not curated for him. And so if someone can come in, curate that supply, present it to the consumer, and fulfill it in a reliable, dependable manner, I think he creates a lot of value. And then also B2B, where you're using Indian cost advantage and data scientists to build businesses that are globally relevant.
So Navroz, we take this thing forward. Essentially, when you look at companies, when you look at founders, besides capital, what in your experience over the last many years of investing, what are the 2 or 3 moats which have you found that companies have really done a good job in building? I mean, those are the ones which have really succeeded in building out, other than capital.
Yeah, capital is not a moat, definitely. I look for outstanding founders. That's number one. Particularly in India, I feel the delta between an outstanding execution is so hard that the delta or the alpha you create, be an outstanding founder versus just a good founder versus a mediocre founder versus a bad founder, is massive. Because his competence is amplified by how much daily execution he has to manage. I look for large pools of profit. and I look for a business that has enduring moats, whether it's data science, which, as you know, the more data, the larger your data set, the better your algos, the better your outcomes, more people you attract, the more viral your data set grows. And as your data set grows in a nonlinear manner, you increase the space between you and your competitors. And it's just, then it becomes impossible beyond the point, right? It's the evolution of Facebook and ByteDance and Google and Amazon. So I really spend a lot of time on data sets, data science, machine learning, artificial intelligence. In fact, we have a dedicated, apart from a $300 million dedicated VC fund that aims to find, identify, and capitalize the best and the brightest Indian founders in their angel, seed, Series A and Series A plus rounds. And then on top of that, provide them with a massive incentive package for up to 3 years. We also have a growth fund, and then we also have a fund dedicated to identifying Indian businesses that have at their heartbeat AI and ML and machine learning and data science as a competitive moat or a competitive advantage. And over there, we've got some really interesting companies in our portfolio. So those are kind of the things that I look for.
Navroz, that's very interesting. We're just coming to the fag end of our conversation. I wish we could have taken a lot more time of you, but you're doing a lot of things. You have dedicated funds, you got private, you got public, you got all these things running in your head. You're waking up at 5:30 in the, you're doing your first meeting at 5:30 in the morning. I think prioritization would be a big one for you. Prioritizing where your time goes, where your mental model, your mental space goes. Just a little bit on the personal side, how do you manage to decide what is your priority and how do you take it up?
Yeah, so there are a couple of non-negotiables in my personal life that I simply won't negotiate. One is, I'm a single dad of a 5-year-old and an 8-year-old boy, Darius and Zane. For me, they are number one. And every other week I have them. I share my time with them almost equally with my ex-partner, who's also a wonderful mom. And when I have them, I'm off limits. My sister knows that you can't schedule anything. You can't get me, my co-founder. I won't pick up his calls, although he's very respectful of that time. So that's number one. Making exercise a daily habit for me and my team is number two. That's non-negotiable. Alongside number one, obviously, is making time for my family. I have two 82-year-old parents who I'm deeply attached to. So making sure they're okay. Kids, exercise. So that's the personal life. Outside of that, there's no real space for very much else. And then the rest is work. It's driven by this. We have one life, as Rajesh and I have discussed, one glorious microcosm of time on this magnificent universe. And I want to, make a mark. That's it.
Navroz, when you look back, if there is one or two turning points in your life, what would they be?
One was definitely the passing of my sister, Kamal. And although we've never really talked about it much at home, this sense, I remember my mother, who's really the drive behind my life. My father worked, went to work at 8:30 a.m., came home at 9 p.m., we'd eat dinner, and then he'd be back at work. And still, amazingly, at 81, 82, is working 8, 10, 12-hour days. But the passing of my sister left me with a sense that two things happened. One, I had to live not just for, I had a responsibility to live intense with twice the intensity, because I had her life to live as well. And I remember one occasion, my mom sitting me down and saying, look, you now have to live not just for yourself, but for your sister too. So that has kind of stayed with me through the years with great intensity. And then second is seeing my mother pivot from being a fully dedicated professor of English in Mumbai, at the University of Mumbai, to essentially giving up on that and flinging herself with great fury and passion into social work. I think I can't imagine the trauma a parent goes through when a child passes away, but watching that and, you know, working with orphaned kids, working with the poorest of the poor in the toughest conditions for decades, really, I think left a mark on me, which I only realized when I woke up several years later and felt this deep impulse that I had to come back to India at some point and either find a way to give my wealth away to those who needed it far more than I do, or to go into politics and use politics as a way to improve the lives of others. And I think it affected, you know, now that I look back on it, I think it affected my sister also. My sister today is one of the top neonatal pediatricians in the country. And, you know, neonatal, you know, she deals with the brain and the spinal cords of young children. My sister who passed was born with birth defects in her brain and spinal cord. And so I think this passing of my sister was a seminal factor in both my older sister's career path as well as mine.
So that was touching, I think, Navroz, and I think it's been a beautiful time spent. Normally, we at the end of it, we try and summarize and we try and give a summary of the entire conversation. The amount of notes I have taken, I think I cannot summarize. It is a lot of information and knowledge and experience that I think you've managed to compress in this 1 hour. I can only say that I take back a lot of this from a lot of our hippobrains that we keep meeting. There is this aggression that you have, this drive and the motivation that you bring. And I'm sure you drive a lot of the people with you and get them to work as hard, but you still have a very soft and a very passionate side, which in many ways, you know, sometimes mere mortals like us don't even understand how one can speak to the other. And that's probably makes you what you are and is responsible for where you are right now. Thanks a lot. It's been a great pleasure. And I really can't summarize, except one thing I will remember: valuations in search of a business as opposed to business in search of a valuation.
Yeah.
I think that's something that I can keep that as a nice line anytime anybody talks to me about, ye mera naya startup hai.
Yeah.
Rajesh?
Well, thank you guys. I'm a big fan of Rajesh, who himself has, as you know, been an entrepreneur. And I believe that being an entrepreneur in India, I always tell my team, this is an act of supreme courage. With all the odds stacked against you, all the bureaucracy you have to fight against, all the lack of safety net most young entrepreneurs have. They don't have the luxury of having the Western education, the Western safety net, the Medicare, Medicaid, you know, nothing, right? And at 20, 25, 30, 35, they fling themselves into these amazing endeavors. And so I always tell my team, we have 35, 40 portfolio companies. We have 35 or 40 babies. But for these young Indian entrepreneurs, they all each have one baby, right? And so to me, to be able to sit opposite you guys, share my message and try and support these young Indian entrepreneurs in their journey is super fulfilling. So thank you.
Thanks a lot, Navroz. Wonderful conversation. And I think there's one piece of advice which I think every young person who's starting a journey, the young Navroz, should actually take away, is pick the area which is ultra competitive. I think that's the best.
Pick the area that you're really passionate about. And I just said this to someone else yesterday, a guy on the men's tennis team at Queen's Club that I'm a part of. I said, just make excellence a daily habit. In everything, great or small, you do. I remember my father growing up telling me, son, even if you end up doing jhadu katka for a living, you make sure you're the best jhadu katka guy on the planet, right? Whatever you do, the smallest thing, the most mediocre thing, putting a period at the end of the sentence, make sure it's the right spot. do it with excellence, because excellence is a habit.
Fantastic. Oh, back to you, Jemit. Thanks a lot.
Thanks a lot.
Thanks
a lot, Navroz. Thanks a lot for watching us. You can get more episodes on Hippo Brain. Don't forget to subscribe and click a bell. And talking to people like Navroz, I am sure even if you learn one small thing, you'll be extremely successful in your life. You can find us on YouTube or on our website or on our podcast, wherever you get them. Thanks a lot.